crypto warriors, changing our world day by day. The way of the crypto warriors, can't rely on the bankers, no way.
Good morning, Bix Weir. RoadToRoad.com with your morning horn disease, your sip of chaga coffee. Oh boy, lots going on. Let's take a look at. Go to RoadToRoad.com and listen. It's the very first video I have posted there. Cliff high on the fate of silver and humanity. Go check that out. It is happening right now, and you might not see it in the price. Remember, when these bankers are ready to move to the long side, they slam silver, and ultimately push it down so hard that no one even can believe how low it is. At least that's what JP Morgan used to do. Now we have a different entity, Bank of America, but they're working with JP Morgan, and I'll get to that in a second. So yes, they can push silver under $20. They can push silver under $10. They can push silver under $0 and put it to minus $40 like they did in oil. It's a click of a mouse. It's that easy. You know, the question is, how will you react? Where will you get silver? If the price of silver is zero, theoretically, you can go to any store and they'll give you the silver. It doesn't happen that way because COMEX price is a lie. That's the biggest thing you need to keep in mind. COMEX price is a lie. Listen to the Cliff High video. We will hit $600, $700, $800 silver. We'll get into the tens of thousands of dollars silver, but it won't be on the COMEX. The COMEX is futures and option fraud run by the banks, participated in. 99% of those trades are the banks trading back and forth to each other to set the price. I hate to say it. We live in a dysfunctional silver market. But you can, also there when you're at roadtoroad.com, put your name and email address, and I'll send you email updates. And also, subscribe. We're almost at 100,000 subscribers. Click the subscribe button on YouTube. Okay, let's talk about the silver price. It's hovering at $22.70 on the COMEX. They did this to get it below the 200-day, 50-day, and 100-day moving averages, which you can see right here. That's what they do. I do believe they'll try to push it lower, and probably tomorrow when the Fed raises 50 basis points. I'll get to that in a second too. It does nothing. You know, real inflation is probably 18, 19%. They say it's 7% or something to that effect. In order to stop inflation, you have to raise interest rates, Fed rates, above the rate of inflation. What? They can't do that. That would mean they'd have to raise the interest rates to 20%, like Paul Volcker did. Absolutely. Are they going to do it? Absolutely not. Absolutely not. Let's take a look. Even people are even starting to say it. On Bloomberg, Fed needs to do more to raise interest rates. They're not going to raise the interest rates. Well, what's that, 0.5% right now? Take a look at this. Where is it? Here it is. This is from Trading the Economics, United States Fed funds rate. This is over the past since 1970. Right here in 1980 is when Paul Volcker said, oh my God, we got inflation running at 13% and our interest rates were 11% at the time. So as soon as he got nominated, which is right in here, let's see, where did Paul Volcker became the chair of the Federal Reserve August 6, 1979, raised interest rates from 11% to 20% in the first few months. And it stayed up above 10% for at least 2 years, 2.5 years, 3 years. And then all the way to 2005, it had above 10%. And that was when inflation was, it was bad, but it's not as bad as it is right now. They measured inflation differently there too. So if Jerome Powell wants to stop inflation, he's going to have to raise interest rates to 25%. That ain't going to happen. So we are going to see hyperinflation. More likely, they're going to pull the plug on the banks. Back in 1979, they didn't have this monster quadrillion dollar derivative bubble ready to pop. And now we do. And that's the destroyer. As Warren Buffett says, the weapon of mass financial destruction. Absolutely. It's still hovering out there, looming large. So, yeah, check out this. So, here we have 20% when Paul Volcker jumped in and said, oh my God, we got to raise it to 20%. And then he slammed it back down because everybody was going crazy. And then inflation kicked right back in. So, he had to jump it up again to 18%. And slowly over time. And this is with market rigging. They didn't have the kind of market rigging we have today, but they still had market rigging. So, yes, here we are today, way down here at the bottom, 0.5%. It's just crazy. And there's a decision tomorrow on interest rates. Everybody's saying, oh my God, they're going to raise 0.5. It's going to destroy the stock market. Hello? 0.5 is nothing. They got to raise it to 20 to 25. If we really have 18% inflation, which I think we do, maybe more, they got to raise it to 20 to 25% just to slow it down and hold it there for probably 2 years. It ain't going to happen, my friends. So keep that in mind when you look at the silver price. Yes, silver today should be trading. Well, if it was freely traded, it would be up in the $2,000 range with gold. If it was freely traded, there's 6 billion ounces of gold in the world available for trading, or available total, supposedly, according to all the experts. And there's 6 billion ounces of silver. So what should it be trading at? Don't forget, silver is absolutely necessary for our future high-tech world we're moving into, or we're in now. Elon Musk, he must have massive amounts of silver long positions. Or he's an idiot. And we know he's not an idiot. He knows exactly he probably bought a bunch of silver mines and didn't tell anybody about it. So keep that in mind. Keep that in mind. Again, this is what's happening in silver. It could be your last week or last month to buy any physical silver at any kind of reasonable price. Now, I don't know if the bad guys are going to click the mouse and put silver to minus $40 just to prove they can. They did it in oil, the largest commodity bought and sold in the history of mankind. They put the COMEX price to minus $40. Raise your hand if you trade on the COMEX. Nobody trades on the COMEX. A couple people, like bullion dealers that hedge their product. Smart move, but at the same time, you're hedging with a criminal, and they change the rules all the time. So, at any time, those hedges are at risk of them saying, "Okay, we're tripling, quadrupling the amount of money you got to put down just to squeeze you." Be aware of that. Who's the largest hedger on the COMEX? The U.S. Mint, even though they're not producing anything. They were the largest because they're assisting in the manipulation. That's the thing that Ed Moy of the U.S. Mint never told anybody is HSBC ran their hedge book for a long time and was the largest short. And then they passed it off JP Morgan. I'm sure JP Morgan runs their hedge book now. Actually, I don't know about now. And the U.S. Mint might be that third party. There's a third party involved in the silver leasing rig game. So I'll get to that in a second, too. Here we go. Silver futures. People are saying, Bix, what's going on with May? I thought May was a silver delivery month, and silver deliveries would be off the charts. Off the charts to me is anything over 50 million ounces. I think that the most ever is like 85 million ounces. They're doing something different. They're delivering part of it on the COMEX, the futures and options. But as you can see from the exchange for physical right here, just yesterday, that's 9.4 million ounces that was going to be delivered, got transferred over to the LBMA, the criminal, it's not an exchange, association in England. That's legal now. They changed the rules. That's legal. So they can make the silver deliveries off the books, basically. And that's where we see the OCC filings of all the derivatives. The Office of Comptroller of Currencies, that's where we found out Bank of America leased massive amounts of silver, 10 times what the Hunt brothers were playing with. 10 times what the Hunt brothers were playing with. Bank of America leased it from JP Morgan. And there's a third party in there. It could be, I don't know who it is. Could be the U.S. government. Jenny and I are hot on the trail of it. But it's not one of the people I had predicted. If you want more on that, go to roadrunner.com in the private road. Look at the latest Jenny Moonstone reading, and we discussed that very thing. Who is that third party? I got more ideas on it. It's hard to see because these are all private contracts. The OCC data is OTC, over the counter trades, which means it's a side bet. It's a side derivative bet. It counts as a derivative, but it's not on any exchange. It is a contract between J.P. Morgan, Bank of America, and another entity. I don't know who that other entity is, but I'm trying to find out. Okay, so yeah. So basically we have there was another exchange for physical on last Friday, which was 6 million ounces. So as of Monday, the total that has been shifted over to exchange for physical is 14 million ounces. Interesting, but this is it's also a July contract. Bank of America has all these are on 1-year contracts, so they have to look out not only this delivery month, but they're looking at July and say, holy shit, we have this monster position in July, we got to get rid of 2. Let's take 9 million ounces and shift it over to the London Bullion Market Association, the LBMA, and I'll show you that in a second here. So what we have is 2,759 contracts that have been delivered, which equates to 13 million ounces has been delivered. And again, we have left to deliver is almost 4,000 contracts, so another 20 million ounces. That's about 33 million ounces. And you can get daily deliveries also. If you're a member of the in-group elite, the COMEX trading, you can go to the COMEX and say, okay, I want delivery this month. You can buy it this month and take delivery this month. So the open interest could and usually does increase. My expectation is 35 million ounces will be delivered this month on the COMEX. And as for the OTC, I don't know. Probably over 100, 150. Remember, March we had 200 million ounces put in the exchange for physical category. So, yeah, March was the biggest month ever as far as deliveries based on that information. But what they're doing is they're hiding it. It's a shell game. They're hiding where this actual delivery is taking place and who the owners are. Part of my big long letter, I think 19 ways to fix the COMEX, I sent to the COMEX, and all the people, and they read it. Bart Chilton even commented on it at one point. They decided not to do all the things I asked them. I told them, hey, if you want to make this silver market honest and open and free, number one, publish exactly who owns what. Publish who has contracts, more than one contracts, meaning rehypothecation of silver. That's J.P. Morgan. They are in charge of the silver SLV. Isn't it interesting? The largest fine in history for any commodity is the $920 million JP Morgan fine for rigging the silver market and gold and U.S. Treasuries. How can a criminal like that still be the custodian of SLV silver? And BlackRock is the overseer of that. I mean, talk about a breach of fiduciary responsibility. BlackRock. Clearly, J.P. Morgan should be the last entity on the planet to be the custodian of silver. The largest silver rigger in the world, who confessed to it, who paid the fines, who's still potentially under RICO charges, and BlackRock chooses J.P. Morgan to do it. BlackRock is in bed with the criminals, and we know they always were. Anyway, so right now, that's what we're looking at. Probably my guess is 35 million ounces, which is not huge, but not bad on the COMEX. But the only reason it's not huge is because everything's being shifted over to London, exchanged for physical. Again, March had 200 million ounces. Where's the investigation into that? And, one of the things I say in my suggestions to the COMEX, to the CFTC, is to make all trading open so that if the price gets slammed, you can see who placed the trade to slam the price, who dumped 1 billion ounces of silver on the market, the name of that entity who did that trade. If you want an honest market, you got to show the books. You have to show how much silver JP Morgan holds and trades, daily volumes. Daily volumes are off the charts. Over 500 billion ounces of silver are traded every year on all these different exchanges, and it's all bullshit. Show who's doing it. So if it's 500 billion, that means the top four traders are probably trading 450 billion worth of silver in these high frequency trades that go back and forth, or at least the top 8. And that's insane. There's only been 50 billion ounces of silver mined in the history of mankind. Or 60 billion. It's crazy. The whole thing's crazy. So I've been digging a little more into the LBMA. It is very hush hush. You're not allowed to talk about anything. That's why it's not a real exchange. But people laugh when I say, $500 billion or 500 billion ounces of silver trade every year. They're like, oh, no way, Bix. The COMEX is, the COMEX data is right there. It's like 100 and something billion. The LBMA only shows net transfers. So they take all the things that happen in a day, not the trade volume, but the net transfers, and it reports that on a daily basis. And look at the daily. This is average daily volume of transfers of physical silver is what they're declaring. The average daily volume for January was 200 million ounces per day. 200 million ounces per day. And as was told to us by a JP Morgan trader who wrote an article about it, the actual gross is at least 3 times this number and probably a lot more in times of volatility. I forgot the name of the trader. He wrote it in the LBMA had a magazine called The Alchemist. And he wrote an article saying, justifying why so much silver trades hands. He goes, oh, that's just net. The average daily volume should be at least 3 times, probably 5 times as big, which puts us at 1 billion ounces. 1 billion ounces a day supposedly is transferred on the LBMA. 250 trading days per year, that's 250 billion ounces, plus COMEX 100 billion, that's 350. And then you add in all the other ETFs and silver trades that go on, and you end up with the 500 billion, which I call bullshit. I say that's just a price rigging mechanism. If we want free markets, you need opaqueness. You need to be able to see through the bullshit. Anyway, cryptos are hovering. Again, cryptos are the future. Silver is going to be a redemption of past price suppression, 170 years of price suppression. Pretty soon I'm going to say it's 175. I'm going to say it now. It's 175 years of silver price suppression. Has to be reversed. And if you ask me or anybody who looks at the numbers, silver and gold should be equally priced. If you look at the amount of gold in the world that is really truly in the world, not the 200 million ounces they tell you, but more like 2 million plus tons, not ounces, tons. I think the average right now is 210 million tons has been mined in the history of the world. That's not true. That's one of the biggest lies the banks have ever told. It's more like 2 million tons. And you could times that by 32,000 ounces per ton, and you're going to get a huge number of gold ounces available in the world that will soon, I believe very soon, come into the market. That's what the Road to Ruta comics were all about, finding gold in the Grand Canyon. This comes from the Federal Reserve Bank of Boston. So keep that in mind. We also have inflation is going to, the part 3 of the Trump, Putin, Xi plan, I think it's a plan to take out the bad guys. Definitely China lockdown is going to go against what the Fed's trying to do. and everything that Russia's doing is going against what the Fed's trying to do. This is the good guys taking out the bad guys. So yes, China's completely locked out. Don't expect to get anything you order. I wouldn't pay for anything ahead of time now. Don't pay for anything ahead of time. Say, oh yeah, we'll get you your car next week. Just keep your money and say, when you have that physical car in your possession, and I can audit it, I can make sure it works, all the parts are there, all the chip componentry is there, then yes, I will pay you your money. Until then, let me know when it comes in, and then I'll get you some cash. The stuff ain't gonna come in. Keep that in mind. And again, Fed meets, tomorrow, and sets interest rates. The going consensus is 50 basis points. And then another 50 at the next meeting. And another 50 basis points is 0.5%. And remember this chart. They got to get up right here. If they go 0.5% every meeting, how many meetings are there? 4 or 5 in a year? It's going to take them 10 years. 10 years to hit that if they keep it at 0.5. They're going to have to do what Paul Volcker did. He went from 11% to 20% almost instantaneously. And that's what you have to do. If you're going to beat inflation, you have to have interest rates higher than inflation. Good luck with that, Jerome Powell. Or you just crash the whole system and start fresh, which is exactly what I think is going to happen. So that's where we are. Again, go to roadtoroota.com, hit subscribe today. We are currently giving away one silver Road to Roota coin, the Roota Lives coin. Really cool coin, each individually numbered with a painted red heart right in the middle of Roota's shirt. And if you look at the Road to Roota documents out of the Fed, that heart is black. It is a black heart. This is a red heart. It has a lot of meaning on the Road to Roota. Go to roadtoroota.com. Click on subscribe today. It'll give you more information on how to get your Road to Roota coin. This is Bix Weir. I'll talk to you.